you ever just get that feeling that there has to be a better way? You know, a way to play the markets that gives you a little more control and a lot less stress? Well, let's get into it. Today, we're going to follow the journey of a trader who asked that exact question. And honestly, the answers he found, they offer a completely new way of looking at risk, at income, and at trading itself. So let's meet our guy, the stock trader. He's good, he's smart, he's consistently outperforming the big indexes. But you know, behind the curtain, there's a totally different story playing out. It's one of constant anxiety, of gut-wrenching volatility, and a deep search for a way to trade that was actually sustainable. And that's where our story really kicks off. Now, to really understand the breakthrough he had, we first have to get inside his head. We need to understand his world. And it's a world that I bet a lot of traders out there will find very familiar. I mean, look at this. By all the usual metrics, he was crushing it. Consistently beating the S&P 500, making money when the market went down, even cleverly sidestepping major crashes by going to cash. A total winner, right? But, and this is a big but, the emotional cost was just huge. He absolutely hated the massive drawdowns when he got it wrong. The day-to-day volatility was eating him alive. He knew he needed something different, a way to make consistent money without feeling like he was on a roller coaster every single day. And that's when he stumbled upon a mentor online, a kind of mysterious figure who went by options traders, who gave him one single powerful idea that just flipped his entire worldview upside down. And here it is. This is the fundamental shift. This is the whole ballgame. With an option, you are not buying a piece of a company. You're not buying an asset that you hope grows in value over the next 20 years. An option is simpler than that. It's a contract. It's a bet on where a stock's price is going to be by a certain date. That's it. And getting that one little difference is the key that unlocks this entire world. This really lays it out perfectly. Buying a stock, an asset, that's like planting a tree. You own it, you nurture it, you're in it for the long-term growth. Options, though? That's more like buying a ticket to a concert. That ticket gives you the right to go see the show, but nobody's going to force you to go. It's a contract that gives you the right, but not the obligation to do something. It's all about leverage and probability, not ownership. And just like any bet, there are always two sides. You've got the option buyer. This person pays a relatively small fee, the premium, for a shot at a massive payout. It's a low probability bet, but the reward could be huge. Yeah, it's pretty much like buying a lottery ticket. And then you have the option seller. They're the ones selling the lottery tickets. They collect those small, consistent premiums, and they have a really high probability of winning because, let's face it, most lottery tickets don't hit the jackpot. So as soon as our trader really grasped this, that he wasn't buying assets anymore, he was placing strategic bets, a whole new world of tools and strategies just opened right up to him. Okay, let's start with a really classic strategy, the covered call. The easiest way to think about this is like you're renting out a stock that you already own. So you've got your 100 shares sitting there, you sell a call option against them, and for doing that, you collect cash up front, the premium. Think of it as rent. The only thing you're agreeing to is that you'd be willing to sell your stock if the price goes up to a certain level you choose. It's a super straightforward way to generate some extra income from your portfolio. All right, now hang on, because this is where things get, well, a little weird and really, really cool. That covered call makes sense, right? You own the stock. But what if I told you that a completely different trade, a trade that sounds like the opposite of a covered call, has the exact same financial outcome? Let's talk about selling a put. This is where you agree to buy a stock if it drops to a certain price. Sounds totally different, but just wait. Just look at the numbers. This is what blows everyone's mind at first. If the stock tanks from 400 down to 300, it doesn't matter which trade you had on. The net loss is identical, to the penny. So owning stock and agreeing to sell it high has the exact same risk as not owning the stock and agreeing to buy it high. Wild, right? The fancy name for this is synthetics, and it's a total game changer because it means there's more than one way to build the same position. And that's really the magic of options. They're like financial Legos. You can use a bunch of different pieces, calls, puts, stock, to build the exact same structure, the exact same risk profile. This gives you incredible flexibility to set up your trades in the most efficient way possible. Okay, so if options are bets, then what are the forces that affect the odds? Well, the two biggest ones you got to understand are time and volatility. So let's break these down. So you'll hear traders talk about the Greeks, and it sounds super intimidating, like you need a degree in advanced mathematics. You don't, I promise. Just think of them as the weather conditions for your trade. They're just the forces in the background that are constantly affecting its value. We're just going to focus on the big three. First up is theta, or as it's more commonly known, time decay. And this slide just nails the concept. If you buy an option, time is your absolute worst enemy. Your option has an expiration date, and just like a melting ice cube, a little piece of its value disappears every single day. But, and this is huge, if you sell an option, time becomes your best friend. You're on the other side of that trade. You are literally collecting the value that is melting away from the buyer. It's a steady, predictable force that works in your favor. Next up, vega. This one measures how sensitive your option is to volatility. Just think of volatility as the wind. If you're an option buyer, you want a hurricane. You want a big, crazy, unexpected move in the stock. That wind fills your sails and sends you flying. But if you're an option seller, you want calm, boring, glassy seas. Unexpected volatility is the storm that can wreck your whole position. And finally, we've got delta. Now, this is the one that stock traders get right away. It's super simple. It just answers the question, how much of the stock's move do I actually capture? So a delta of 0.50 or 50 means for every dollar the stock moves, your options price is going to move about 50 cents. It's your leverage. It's your bang for the buck. So, after learning all these new strategies and understanding these new forces of time and volatility, our trader felt like he was right on the edge of it. He was about to discover the one big secret, the holy grail of trading. But his mentor had one last and maybe the most crucial lesson to teach him. And that was it. That was the most important lesson of all. The endless, desperate search for that one perfect, can't-lose strategy, it's a complete myth. It's a distraction. The real key to long-term success isn't some secret formula. It's something else entirely. The real holy grail, it isn't a secret indicator or a magic setup. It's a foundation built on these 4 pillars. First, disciplined risk management. Every single time, no exceptions. Second, having a system that you have tested inside and out, that you trust. Third, a real deep understanding of probabilities, so you can stop thinking in black and white certainties. And maybe most importantly, finding an edge, a strategy that actually fits your personality and your goals. So here's the ultimate takeaway from his whole journey. Stop searching for a magic bullet, because it doesn't exist. Real, lasting success in trading comes from your process. It's about building a system, piece by piece, that over hundreds and hundreds of trades just tilts the odds ever so slightly in your favor. That's the real secret. And in the end, it all comes down to a choice. The market is just this big ocean of probabilities. You can be the frantic trader out there, trying to ride every little ripple and just exhausting yourself and your account. Or you can be the patient professional, the one who understands the ocean, knows which waves offer the best ride, and has the discipline to just sit and wait for them. So the question is, which trader are you going to be?